Hi, ladies and gentlemen. Welcome to SA Accounting Academy. Here's a short clip on one of our previous webinars. I hope that you really do enjoy it.
Gentlemen, and a very warm welcome to this South African Accounting Academy webinar on the Principles of Business Valuations. I am Nestene Botha, and I will be taking you through our educational journey this morning. Fantastic to have you. So, who am I? I am a chartered accountant. I once was one of the top 35 under 35 chartered accountants in South Africa and one of the top 50 women in accounting in the world. I run an entrepreneurial haven at the moment. So I literally help entrepreneurs around the world find what they're good at and make money from it, and then scale through the process so they can employ more people, create more jobs. I'm all about helping small businesses in that way. So one of the areas that I would help them with is the financial area, because I'm originally from the financial area and I used to run my own audit firm as well. So yeah, I believe you're in good hands. On that note, I love to always make my webinars as interactive as possible. So I want to encourage you, ladies and gentlemen, say hi in the chat. If at any point in time you have any comments or questions or insights to contribute to this conversation, I would absolutely love to hear from you. Please add that in the chat, and I would love to get in touch and to help you with that. And that is how I ensure to deliver as much value as possible for you during our 2-hour session. Okay, so you're welcome to connect with me on YouTube. I do have a YouTube channel where we put out content to help small business owners around the world. You're also welcome to connect with me on LinkedIn. Ask me anything, and I will try and help you. So the connection links are embedded in the slides. You can literally just click through, and if you want to connect, I'm more than happy to do so. Okay, but for today, let's move back into business valuations. So today, what we are going to do is focus on, in these 2 hours, we're going to be able to understand the business valuation principles to be taken into account when valuing an asset. And that will include using the market approach, the income approach, and the cost approach. Okay, so moving on, we're going to cover market approach, income approach, and cost approach. Our focus is going to be on really discussing the principles. I want to give you a very good idea of the principles and the high level critical thinking that should be going on in your mind when you're dealing with valuation. So we're not going to focus on the actual number crunching. The number crunching becomes easy when we properly understand our principles. Okay, so I'm going to try to make it as easy as possible for you. If you do want to go more into the number crunching, we can we have done a webinar where I went into detail in the cash flow approach, and we broke it down completely on an Excel spreadsheet. But you're more than welcome to access that. But for today, it's going to be principles, and you're going to be happy that you're here so we can go through that. Okay. So in terms of the table of contents, we're going to start with a little bit of an introduction. Why do people need valuations? Let's just remind ourselves of the purpose of why we have to do valuations. We'll look at the importance of understanding the purpose and how that works with the different number crunching exercises that we then employ to get to an appropriate value. We'll talk through some important concepts. And then we are going to be going into our valuation disclosure checklist. So one of the important parts of the valuation process is that we make sure that the reports that we present to our clients contain everything that needs to be in it in order for it to be a valid valuation and to make sense. So we'll have a look at that. Yes, Conrad, you will be able to obtain an attendance certificate for CPD purposes. There will be a quiz that you can complete, and then right after you complete the quiz, I think the CPD is automatically captured. Okay, then the different types of value, we're going to go through that. So we'll have a look at all the different types of definitions of value, just reminding ourselves again of how important it is to pinpoint which value have we been asked to calculate, because there are a number of different types of value. Then we are going to move on into the actual valuation approaches, just talking through the three main methods that are usually used. And we'll finally look in detail at the market approach, the income approach, and the cost approach. Again, going through the steps that we need to understand and know how they logically make sense together to get us to an answer, but we won't be completing Excel spreadsheets or physical calculations today. Okay, so let's just start off with a quote. I thought this was a pretty appropriate quote to start off a webinar on business valuations. So Einstein was right about relativity, but even he would have had a difficult time applying relative valuation in today's stock markets. That's from the little book of valuation, How to Value a Company, Pick a Stock and Profit. So I just thought that was a good tongue-in-the-cheek way to start off our session together. Okay, so let's get back to it. Why do people need valuation? So why would we be contacted and asked to complete a valuation? It could be that they are buying or selling a stock of a publicly held firm. It could be that they want to get out of a privately held business, or they want to acquire a privately held business and they need to know what is an appropriate price to pay or to receive for getting in or out. It could be that they need to determine how much tax they owe to the government or to SARS. As part of a divorce, if there's shared property or any type of claim in terms of any property or business, that could cause them to be seeking a valuation from you. If there's a dispute between minority shareholders who wants out, or even between just shareholders in general, and they can't agree on how to take the business forward. They want to resolve things in a way that is fair to everybody involved. That is when you could be asked to come in and provide a value and a way forward. It could be that a compiler needs a value for reporting purposes, so they might have to mention the value of a business or a segment of a business or a property in their financial statements, and they're looking for that value from you. It could be to determine the amount of compensation for executives, division or business unit managers, and employee owners, if there are maybe incentives in place based on the increased value of the business or the segment. It could be that we need to determine whether to proceed with strategic initiatives and or major investment opportunities. So in those cases, we would have to understand the value of the business that we're dealing with first before we can decide what to do with it going forward and what are our options. Do we even have something that's valuable enough to take to an angel investor, for example? It also helps us to offer fairness opinions in the purchase of a sale of company. So it could be that someone's looking to us to provide a second opinion, like, is this offer fair? What do you think? Based on your valuation expertise.
I hope that you enjoyed that video. For more of our webinar videos, go to www.accountingacademy.co.za. Thank you and have a lovely day.